Now let's take a look at the bigger picture. Octavio Marenzi is with us, CEO of Optimus. Thank you for being with us. So your thoughts on the big picture? I mean, I know that the job market, labor market is still tight, though loosening some. What say you about 2024? How do you feel about markets?
I'm actually feeling pretty good about the equities markets, and I've been in a good long time. So I'm feeling we're off to a really good start. We saw a nice rally at the end of last year. I think going into this year, basically, as the Fed sort of cutting interest rates, or at least not raising them any further, and that's going to be very, very good for equities and for bonds and for all sorts of other asset classes. We're starting seeing a spike at the moment in Bitcoin and in gold and things like that. So those are areas worth watching as well. But I'm very optimistic about this coming year in terms of equities prices and where they're going to go. And I think it really is all eyes on the Fed and what are they going to do. Now, I will say we saw the minutes come out from the Open Markets Committee yesterday at the Fed. It's a bit of a mixed bag, but there's not as clear a direction to tighten rates anymore, keep them very, very high. So there's some dissent brewing within the Open Markets Committee about whether that's the right path to take, and that's going to be very good for the markets as they start to think about lowering rates. So that's basically what we need to do: keep an eye on the Fed. And but I'm like I said, very optimistic, the most I've been in quite some time.
That's actually pretty good. Nice to hear it, particularly since when I asked one of the traders here about the year 2023, he said, well, all I could say is good thing that those last few months, right? Because August, September, October were pretty tough, but then you had the end of October, November, December, which looked better. Do you think that there could be a pullback first and then the markets sort of take off to new highs throughout this year?
Well, I think it all depends in terms of what we see on the geopolitical front and what we see in terms of new minutes coming out of the Feds and new decisions coming out from other central banks as well. So that's really what we're going to have to keep an eye on. Our market's going to pull back a bit now. It looks like they've pulled back a bit now over the course of the past couple of days, but I don't think that's anything to be terribly concerned about. I think that's all normal and sort of a day's work over all that kind of volatility. But I think now that we've seen the largest central bank in the world basically sort of turn the corner there and say, okay, we're going to start to cut interest rates potentially in the coming year, that's really going to be sort of wind in the sails of the equities markets and push it forward. So there might be a pullback here or there. There always is that possibility. But I think overall the direction is going to be upward and onward, as it were.
Right, understood. So when you have an investor and they're telling you, what can I do here and put my money to work, what do you advise to them?
Well, I think it all depends on the individual situation. So I can't really give investment advice on sort of blanket basis like that. But I think really being long in equities right now is a really interesting place to be. I think investments like gold, precious metals are looking very, very good, especially with this geopolitical backdrop that we have at the moment. So if we see a broader war break out in the Middle East, I think gold will certainly be a very, very nice place to have some of your assets parked. So it all depends on where that goes, but I can't say on a blanket basis. I think tech stocks will continue to do really, really well. They always do very, very well in a lower interest rate environment. As the Fed cuts interest rates, those are the stocks that really, really take off. And we've seen that over the course of the past few months as well. So I think we'll see continuation of that. And I wouldn't get too concerned about seeing a few days now in the new year on the downside. That's simply the way the markets work, and that's nothing to be terribly worried about.
Yeah. Understood. I mean, in an environment where you're expecting rate cuts, how many cuts are you expecting?
I really don't know. Well, I mean, there might not even be that many cuts, but I think there certainly would about 6 to 12 months out, so about half a year into the years I'm expecting somewhere in the summer, them start to cut rates a little bit and not raise rates any further. So I'm expecting 1 or 2 or 3 rate cuts. But bear in mind, once they start cutting, typically what the Fed does is they carry on going in that direction. It's not like they do one up and one down and they alternate between the two. Once they start to cut or raise, they tend to carry on going in that direction for an extended period of time. I'm talking for a year or 2 years or things of that sort. So that is, I think, what we should expect to see there. So I think they'll start to cut basically in the summer, and then we'll carry on for a long period of time unless something else intervenes. So if we start to get high prints again on inflation numbers and things of that sort, they're going to be very cautious about carrying on that direction. But I don't think that's going to be the case. So I think we'll expect to see 3 or 4 interest rate cuts basically in the latter half of 2024.
Right, understood. And what about for investors? I know you don't want to make a blanket statement, but I mean, are there certain things that you lean towards? I mean, I know you have sort of an international footprint too. There's been a lot of talk about India over China, emerging markets, or is it more here at home? You like small caps, mid caps, large caps? Is there anything that you can say that you do like?
Yeah, absolutely. So I definitely like the tech stocks. I think they're going to be positioned really well over the course of the next year or so. In terms of that, the large tech stocks that we see that have done so well over the course of the past few years. So I expect that to be see a continuation on that front. I think gold, as I pointed out, is a really interesting place to be. I do also think in the very, very short term, as you look at this, interest rates on the very short end of the yield curve, so the sort of the 1 to maybe 6 month range, are still very, very high. So you're able to get well over 5% return on those very short term United States treasuries with taking zero risk. And that's always a temptation to do that as well. I mean, in the equity markets that go up and down and sideways, there's no real solid predictions there. But to get a nice solid 5.5% or close to 5.5% return by basically sitting your hands on the sides of the market, not taking any risk at all, I think that's a very tempting place to be as well. So depending on the individual situation, I would say that is a very appealing investment as well. It's basically just to sit and wait for the time being.
Right, understood. Any last thoughts? I mean, are you thinking about the oil moving higher or any sort of wild cards?
Well, you talked a bit earlier about Bitcoin and where that's going, and I think a lot of people now are starting to think Bitcoin is going to have its day in the sun. It's going to go mainstream. The big institutional investors like pension funds and all sorts of mutual funds are going to start to pour money into Bitcoin as the SEC looks like they're poised to approve the first spot Bitcoin ETF. I don't know if that's going to make much difference. Anyone who wants to get exposure to Bitcoin can do that very easily by investing in a futures ETF or actually buying Bitcoin directly. It's very easy to go to an exchange like Coinbase and buy Bitcoin. So anyone who wants to get exposure, institutional retail investor, can do that currently. So I'm not terribly optimistic about Bitcoin's future right there as a result of that, as that kind of ETF gets approved. And I think the regulator has to approve that it's, of course, the SEC, but they have a tremendous amount of animosity towards Bitcoin, and they've made that very, very clear. I mean, basically, they're suing most of the Bitcoin industry, the exchanges, the custodians, the brokers, anyone they can hold of is basically embroiled in a lawsuit now with the SEC. And I feel the SEC is are going to continue down that path and carry on making life very, very difficult for Bitcoin operators over the course of the next year or so. So I'd be wary about that market really taking off in the way some people are expecting now.
Yeah, Octavio Marenzi, thank you so much, Optimus. Always great to have you on the show. Really appreciate it.